What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is June 14th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about why the last 24 hours of Bitcoin's price action tells us everything we need to know about the next couple of days and weeks and where price is heading. And I got to tell you guys, it's not looking good. I want to explain why as we go throughout the video, and I also want to give an interesting spin on what we're going to be watching for in order to determine the next altcoin cycle. A little bit of a counterspin topic here. So we've got a lot of things to dive into today's video. If you guys happen to enjoy the rambling, consider dropping a like. It's one of the greatest ways you guys can support the channel. And let's go ahead and dive right into it. So I want to start by talking about Bitcoin's price action over the last 24 hours, specifically looking at the performance on June 13th. And as you guys can see, we had a relatively neutral day here. There wasn't too much massive volatility coming in, but there's something very telling here, which was that at the beginning of the day, we actually made a price accelerated move for Bitcoin. If we dive into the hourly, which as you all know, I'm usually not doing here on the channel, I just want to go ahead and emphasize a very critical point here. From the start of the day, we essentially moved up and had about a 1.5% move, a relatively short, small move in the grand scheme of things, considering what happened yesterday, and I'll dive into it in just a moment. That was followed by, well, a move to the downside over the past 24 or 48 hours. So what's really going on here? Why is this such a big deal here? I know it's not a major volatile move, but if you understand the context of what happened the other day, this is something that's quite stark, and it's playing into a much broader trend that is only getting worse and worse. Yesterday, we had the CPI numbers come out. This is the inflation reading where year over year, as we can see from the month of April, we dropped an entire percentage point in the inflation reading. Definitely a step in the right direction. I want to break down the CPI a little bit later on, talk about some of the concerns underneath here when you start to discount energy prices and really look at the broader range of inflation. But again, we'll talk about that in a little bit. The key point here is that no matter if you thought the CPI reading was good or bad, Bitcoin's performance was relatively weak here, especially when you compare it to the continued optimism in the NASDAQ and technology stocks that just seem to be the conduit for liquidity right now, of optimism around topics like AI, you name it, right? Or the big FANG stocks starting to lay off employees and cutting costs, right? These are the narratives that the market has right now, that they've got people so goosed up about, right? So as we can see here, just the other day, another 0.8% move for the technology index, the NASDAQ, the IXIC. And when we start to take a look at a chart we've been discussing here for the past couple of years on the channel, but really have been emphasizing and hitting home since back in April and May, you can see that the situation for Bitcoin and cryptocurrencies is just getting worse and worse. When we turn on our drawings here, you guys will probably remember we talked back in May over the past few months about the fact that this was likely, as we entered into this channel of prior support in the past, that it was going to act as resistance, and that this is basically going to be a large deviation, right? And when we got that red flip here on the momentum indicator after holding blue here since back in January on the weekly time frame, we are starting to see the early stage signs that this is starting to head south big time, that crypto is not the leading trend right now. And it is important to realize that while buying the dip and hodling and expecting that crypto will eventually go into a new bull market and it's going to outpace all other assets is the way to go with your capital, things may be very well different this time around, considering that people are going more towards more defensive plays. They're concentrating in those that are exposed to AI. If you're more on an optimistic side of trading or investing. So people are chasing stocks like Nvidia or the FANG stocks or Microsoft or Apple with their separate narratives around AR, VR, as well as AI. And then you start seeing the optimism going towards other sectors, any remaining optimism in the market considering the macro conditions, and a lot of other liquidity going towards defensive cash-rich tech plays that essentially can weather the storm and are really concentrating a lot of the optimism for future growth, if there is any whatsoever, over the next couple of years with Fed monetary tightening. So this is not a good look here for the crypto space. To see the ratio down over 20% here, whereas it was priorly leading here. And again, just to kind of clarify here, this ratio between Bitcoin and the NASDAQ is not guaranteeing one is going up and one's going down. What it's signaling here is that one asset or one measurement is outpacing another. So when this is moving up, Bitcoin is outpacing the broader technology stocks or the NASDAQ. And vice versa, when it's starting to go down, it's underperforming. And in this case, substantially since back in mid-April. Now, it is, in the grand scheme of things, in line with where it was back in June. This isn't total doom and gloom for Bitcoin, as it did accelerate off of those November lows after the crash of FTX, where it collapsed over 27% on the ratio. But this again proves here that there is a very good chance that we are going in for fresh new lows on this, guys. That Bitcoin, especially if it starts to decline and we start to see, again, the NASDAQ continue to accelerate, this can really start to play out here. Now, here's the thing you got to think about here. That would be assuming, the quickest way to get down to this kind of level for a third low would be if the NASDAQ continues to accelerate and Bitcoin's declining, right? Which is already going to be bad for Bitcoin, right? But I want you to think about this here. What happens if the NASDAQ is starting to top out or decline? That we aren't really in a new bull market, and Bitcoin within this ratio is still going to come down here towards these new lows in line with the two prior ones. I'm not saying it has to go exactly there, but if we're coming anywhere in this ballpark from 1.4 down to 1 on the ratio, and the NASDAQ starts to decline, what does that tell you about what Bitcoin's price has to do? It tells you that it is going to go through a brutal correction, that all of the gains that were built off of narratives on thin sand, that were things around de-dollarization, around the Bitcoin bank run, around all these fluff narratives that really don't have the data to back them up, all that price action is going to vaporize. We don't know when that's going to happen. As we have charted here, we just have a general outline. We didn't really specify any clear dates, but we have got that weekly trend flip on our momentum indicator. And you can bet that we are getting ready to start planning some short positions. Now, if you guys want to know how we're going to be shorting Bitcoin, what's the avenue we're doing, what are our kind of take profit levels, how we're going to be doing that, you guys can sign up for the dashboard if you want. You guys will generally know when we're going to be short, at least technically on Bitcoin here on the channel. I will let you guys know generally when we build that position, but how we go about doing it, when we start taking profits, the nitty gritty, the details, all of which can be accessed within the dashboard down below in the description. You guys can get 20% off annually if you want to support the channel. We just want to give, again, those benefits to those who are in the dash report who make this channel possible. It's a huge backbone that allows us through bull and bear markets to do what we do here and produce a lot of the free content we put out. So again, we are getting very close to that, guys, to that position. And I know a lot of people have the immediate reaction of saying, Nick, could have done it at 31,000. Yeah, it's the same kind of argument that people make. Oh, you should have bought at 16K. No, guys, it's not about getting the absolute top or bottom on these things. It's about knowing when you've got the conviction of the trend, right? I would say very clearly, right, if we would have followed the momentum indicator here in the weekly time frame after getting a very convictive move here in January, we could have bought here 20,000, 21,000 and rode up a pretty substantial way. Even if we just followed the straight indicator, that'd be a 5K move from that entry point. Still a nice 25% return, and then during that period of time, you can start to take a bit more risk because you've got the conviction of the momentum indicator. It shows you that over the next couple of weeks, next couple of months, you're probably going to be moving higher to some degree, right? And vice versa here. When we get a clear weekly close here and we continue to hold out for the next week, this just builds conviction that, hey, the bulls didn't show up. This is not a new bull market, at least not for crypto right now. Comparative to the performance of other asset markets, crypto is the laggard right now for the past couple of months, really for the last quarter. So this is not a good look here for the overall crypto space. The fact that we were not able to clear through prior support and make a support once again and move higher, in fact, served as resistance. Not a good look for the crypto industry. And this is Bitcoin, not the altcoin space. The altcoin space is even more abysmal. If you compare it to the NASDAQ, you would compare it to the other types of different ratios that you can build out. If you're taking a look at total 2 and you subtract, ETH or stablecoin liquidity, it gets really abysmal. Now, I want to go ahead here and talk a little bit about these CPI numbers because some people might go ahead and say, Nick, it doesn't really matter what Bitcoin did over the last 24 hours. The CPI is going down. The Fed's going to back up. They're not going to continue hiking rates as they used to. And I'll be honest with you guys, the prediction markets have flipped a bit. They are signaling that we're not going to get a 25 basis point hike in this meeting. At least that's the overwhelming majority. I think about 75, 80% are betting that we're not going to see a Fed rate hike in this next meeting. Got to tell you guys, in my personal opinion, I think that's a really bad move for the Fed. It's delaying the inevitable, kicking the can down the road, so to speak. But again, let's just go ahead and try to understand these CPI numbers. Now, at the end of the day, you guys might have noticed earlier I was talking about the distinction of energy. Now, the CPI itself is made up of a lot of different categories. And one of those big categories that does play a big role, it plays a big role not only in the direct expense of energy as people are paying utility bills, paying for gasoline when they travel to work or travel abroad, and it plays a role in flight costs, all kinds of different things that do play a pretty big role in the CPI. Energy itself has been declining. It has been declining well over here for over a year, and went from one of its highest exacerbated points, a 40% expansion year over year, to now where we are now, where essentially energy has declined to a substantial degree by 11.7% year over year from this point here in May. And that's a really good sign to see. The energy markets are cooling down. The acceleration between supply and demand has started to contract. And we are getting more sensible energy prices. Things are starting to get more into balance. And I would not doubt that that trend could continue for another month or two, right? Or even just start to at least neutralize out where it's not going to come back roaring and expanding by any means. That has probably been knocked out of the picture. However, it is not the only thing in the CPI. And a lot of people, unfortunately, just take a look at the CPI at face value and they see, okay, energy costs are going down. Everything's great. Well, while energy costs have been going down, if we look at all items except for food and energy, right? So all the other components that play a role, the majority of what really makes up the CPI and the indicator, right? When we look essentially at the core CPI, which has to do with shelter costs, which has to do with transportation, which has to do with healthcare, which has to do with all other sectors outside of energy, you see a very different picture. And this is why the annualized metric of the CPI can be incredibly deceptive. You need to look, if you are looking at the annualized factor, you need to also get a viewpoint of the PCE. Because while it is declining here, 5.3% reading from a peak of around 6.6, it's very different than the CPI metric, which looks overtly optimistic that the Fed has really done its job from around 9% down to 4%, pretty much cutting that in half, more than half, right? So this is, again, a big fallacy that a lot of people lead into, that, oh, energy prices are going down, right? The CPI is very favorable towards energy. It's also why, again, I remember back like a year or two ago, back in 2021 and stuff, people were looking at the indicator and saying, oh, no, inflation's transitory, and you got to discount energy because energy can be, quite volatile, and it's something that distorts the CPI. Funny how that same narrative is completely ignored to the downside, right? It's a very important point here to realize that energy itself is just one of the key components to the overall inflation story. It does have a major weight across even non-energy sectors. But if we take a look at that PCE here, take a look at the core inflation, we are still far and few from getting back to the normalized 2%. And this is why, if we go back to what Jerome Powell was saying for a long time, this is one of the indicators that the Fed is really looking for here for inflation. Right, to really know that they've done the job. What happens if this starts ticking up? And better yet, for those who are optimistic on energy, what happens if natural gas prices start to accelerate again, right? If more liquidity keeps entering into the system, right? If we start stimulus, as many people are thinking that is around the corner, like we've been seeing in China, what happens to commodity prices? They could very well easily go right back up. The Federal Reserve has to backtrack, and they have to start continuing to raise interest rates. Now, again, all in all, guys, these are just the metrics I want you guys to be aware of. Overall, we're making good progress towards dealing with inflation. That's what happens when you raise interest rates, when you tighten the balance sheet, when you contract the money supply. The Fed is generally on the right track. But backing out now and not continuing to raise by 25 basis points, a mere 25 basis points, not 50, not an entire 100 basis points, right? No shock factor raises, which the Fed should have done a long time ago to really kind of cool demand in the economy. But albeit they are making progress here, right? The question is, are they doing it fast enough to where the Fed is getting ahead of inflation? Now, I want to go ahead. I know a lot of people don't care so much about the inflation topic. And a lot of you out there are really trying to determine and find other ways, even if you're in the same ballpark as us, that we've got a ways to go before we really kick off a new bull market in crypto. You might say, okay, Nick, look, I agree with you, or I can kind of see your perspective on the fact that we're not ready for new highs in crypto. This maybe isn't the bull market we were looking for. What are going to be some of those signs that you're watching for in order to get long, to really start getting long risk? And I think that's a very good question. And one of the charts that I want to bring up here, ironically enough, I know you guys might think it's funny, is taking a look at the price of none other than Dogecoin. I know. Nick always speaks out against speculation. Why are we talking about Dogecoin here? The reason we're talking about Dogecoin is because Dogecoin, whether we like it or not, is, we're talking about the long-term picture. It's not only a long-standing cryptocurrency, we've got a lot of pricing data to work with. At the end of the day, there's been a lot of talk about which tokens are securities and SEC going after this space. Dogecoin itself is a safe bet. It is a proof-of-work cryptocurrency like Bitcoin. So that's a really good kind of tick on the box here for those who are looking to speculate in altcoins. And at the end of the day, we have not only a lot of pricing information to work with, but it is a speculative momentum play in the market. And at the end of the day, that's what really matters here. If you're trading in altcoins, right, you can care about the fundamentals, you can care about really exciting plays in the market. But at the end of the day, if you're looking to make returns on trades, right, if you're really looking to kind of trade when the momentum comes in, you got to know when the momentum's arrived, right? That's really all that matters when it comes to doing more kind of swing trading, right? If you're a long-term investor, it's a different picture, right? However, I wanted to go ahead and just kind of give like a little visualization here about how not only our momentum indicator can start to signal when optimism is coming, but on top of that, we can see very clearly some key price levels that I think might be of interest. Now, if we take a look at the last two pullbacks for Dogecoin, we can see that they were roughly between 93% and around 96.5%. So I think a ballpark estimate, again, even if we go off of the June lows, we only went down as low as around 92.99%, in line with a similar correction. Notice here the significance of how smart money, the accumulators, are looking at these prior discount ranges, right? So they are looking to build positions around these ranges, right? I think generally speaking, that we're going to be probably coming around 95% here, somewhere in this ballpark range. I'm not going to be waiting for that absolute point. And I'm not saying I need to go exactly long Dogecoin here, but the key point is that I'm looking for accumulation in crypto assets around some of these ranges, right? Around the basket between these two percentage declines from top to bottom. And yes, they are significant in nature. If you take that same range, that was around 5 cents back in June. And if we take it towards, say, 95%, you're talking about a price level that's all the way down to 3.6 cents. If we go all the way down to 96.5%, you're talking about 2.5 cents. So again, you could be facing some significant paper downside on your positions if you decide to kind of go out of the position and sell it. But again, if you're accumulating altcoins, guys, you got to be able to stomach these kind of small volatile moves, and you're not going to be beating yourself up about, oh, I should have bought it 3 or 2 cents. Sure, you'd make a substantially higher returns, maybe another 33, 50% or something, right? It doesn't matter. You're making life-changing returns if you can spot the next altcoin cycle. And again, I don't want this box to be used as a time frame for that. It could take all the way out into 2024. Could be at the end of this year, whatever. The main point here is the percentage decline target. And considering where we are now, right, we're at 91%. We've still got a ways to go. We've got a ways to go, folks, in my opinion, until we really get towards that range of accumulation that can start to form a new kind of deviation point from the prior low and start to upswing prices. Now, again, to this point here about when we can really spot the next altcoin cycle, I'm looking for some inconsistency on the red trend on the monthly. I'm not looking to pick up the absolute lows, right? Because we don't know how far this could really go. I'm looking for some flatlining on the trend where we start seeing some blue, right? I'm looking for a bit of blue on the trend indicator that we utilize here within the DataDash channel. And again, you guys can get access to it within the Dash report link down below. But I'm, again, looking for that inconsistency that's saying, whoa, wait a minute. On the long-term time frame, on the monthly, as we've seen historically, when we get that blue flip, that's something not to laugh at. right? Whether you're interested in Dogecoin or not doesn't really matter. It's a matter of getting optimistic when everyone else is not interested, or more specifically is fearful, and capitulating and selling positions and believing that it's a lost cause. That's when I get optimistic. We have still been red since back in January 2022. So we have no reason to rush this. But this is another one that you guys can add to your arsenal. I think a golden case scenario, I'm just going to go ahead and clear this so you guys can see it. If we get some major capitulation event from 74 cents at the peak back in May of 2021, down towards around 2 cents, I get really interested. That would be really interesting for me when it comes to Dogecoin as a pure speculative play. I wouldn't put all my money into it, but would definitely put a substantial amount of capital at that point. Now, again, the importance of talking about Doge as like a momentum here for bull markets. You can see January 2014, peak of the crypto bubble back then. January 2018, peak of the altcoin bubble following Bitcoin's peak in December, and also May 2021. That was peak altcoin euphoria and peak Bitcoin euphoria around that time. So again, this is a really great kind of tool to add to your arsenal. It should be one of many charts you guys are tracking here. And again, if you're like me, right, as much as I think there's room for in your portfolio to have meme coins, when the momentum is there, these plays have this historic trend of making these substantial moves. When the time is right, it's important to also focus as we go towards getting this potential discount range in altcoins on fundamental plays that have the opportunity to not only outpace meme coins like Dogecoin that have probably gone to the majority of their returns, but also on plays that actually have the substantial room to leave serious impact on the world. You know, over the past year or two, I think a lot of skeletons have come out of the closet, and we're starting to realize just how little development is going on in so many of these projects. And it is now easier, now than ever, to start finding the value plays, those that have actual exciting tech, those who are actually helping to scale concepts like decentralized finance, those that are actually building right now to materialize value not over the next year on the next trend, but to actually build a foundation that can capture a multi-billion, if not trillion-dollar industry that can make crypto much more valuable than it is today, and really tap into the traditional financial space and bring it into the world of decentralized finance. That, for me personally, is our long-term partner here on the channel, Radix. And if you guys have not been diving into Radix just yet, if you did not watch RadFi, back last year and stuff, the major event that exposed what Radix is really doing here and some of the really exciting things that they're building, then you guys need to check that out. I'll give you a quick summary here. Radix itself is aiming to radically redefine DeFi as an industry. It's aiming to scale it up more than 100x from where it is now, and essentially provide the framework to not only streamline smart contract development through its native programming language Scripto, which helps to alleviate a lot of the security concerns that come with Solidity development in the Ethereum virtual machine, but outside of that as well, comes with Cerberus, its consensus mechanism that allows for high scalability of transactions that's going to be required for this type of degree of decentralized finance. And on top of all of that as well, they've got a bubbling community with all types of applications being built here in the bear market right now as the main net completely finishes its rolled out launch here within the month of June and July. So I'm very excited to see these last few phases of the network upgrade come alive. We had an interview with Pierce, who's one of the heads of the project, back about a couple weeks ago. But I want to go ahead and talk about some of the really exciting developments here for Radix. First off here, on the topic of Cerberus, which is the main consensus mechanism, this is something that Dan Hughes has really been heading up, which is again going to allow for, in this case, not only for Radix to scale through a high degree, but also for atomic composability to be maintained. This is a huge part of DeFi, being able to do multiple transactions or essentially functions from within one single transaction on the network. Respected institutions like the Journal of Systems Research went through and analyzed the Cerberus consensus mechanism, and there was a lot of really interesting findings and charts and information that you guys can find within the blog post on Radix's website. So I highly recommend you guys dive into it, take a look into some of the findings, and this is a really good follow-up after the Jepsen research study as well on Cerberus. So to have people like, again, JRS as well as Jepsen going through and doing these types of studies on Radix's main consensus mechanism, this is really exciting stuff, and it is continuing to offer a foundation towards what Radix is really trying to build. But if you're not really the academic type, if you believe that consensus mechanisms, albeit while they are important, are not really what make up a network, trust me, Radix has got you covered here, guys, because as much as consensus is important, it doesn't make a network. What makes a network are the applications, the ability to actually utilize that network in valuable ways and to smoothen out the user experience versus other networks. Radix put together a really great page, which I think summarizes very well a lot of what was covered during the RadFi event back during the past. This is their Radix DLT full stack page. Now, if you guys haven't checked this out, I highly recommend that you guys come here as a primer. You can find it at radixdlt.com/full-stack. I'll leave a link down below in the description. I think it's a great primer for you guys to learn whether or not you want to just be a user, a potential contributor in the space, or even build applications. But it basically focuses in on the Radix wallet, how it utilizes a much better user experience through a variety of key technologies that are exclusive to the Radix network. They're utilizing Scripto and the Radix engine in order to offer a powerful suite of applications that people can utilize that have been built by the community and their consensus mechanism, Cerberus. If you guys have not dove into any of the information around Radix, probably the biggest thing that is going to sell you on Radix is the improved user experience. Whether you've used Ethereum, whether you use layer 2 applications or networks like Arbitrum or Optimism or Polygon, if you've used alternative layer 1s, they all usually revolve around applications like MetaMask, and the user experience is incredibly poor. Not only do you need to have seed phrases, but on top of that, when you're doing transactions, you barely know what you're actually signing. And with things like Transaction Manifest, as well as smart accounts that allow for streamlined recovery and no seed phrases, these are the kind of things that really are going to make Radix stand out even when we get that next bull market. All right, when we get that next cycle of adoption within the crypto space, this is the kind of stuff that's going to help Radix stand out on top. And again, I don't want to talk so much about price at the end of the day. For you guys, I want you guys to focus on the fundamentals of who's really building here, who's adding game-changing technology, and who's building the best user experience. Because if you can find out who's doing that, when it is time to get risk on, when it's time to get optimistic, you'll know which players are going to come out on top. And long term, I think Radix is not some short-term play. They're focusing on really building a narrative around DeFi and focus on building applications that just simply don't exist here today within the crypto space. And seeing what the community has built so far has been absolutely phenomenal. So if you guys haven't, check out the link down below in the description. Take a look into Radix. Spend some time, dedicate an hour to it whenever you can on the weekends, just taking a look into what Radix is building. And let me know what you think down below in the comments about Radix as a platform. But that's going to be it for today's video, guys. I know I rambled on a good amount today, but I hope you guys got some valuable information around this, a more balanced view around the CPI, how we are not out of the woods with inflation, how Bitcoin, while maybe it had been the leader for the last decade, is likely not going to continue being that leader until we can start outperforming the other indices again. And at the end of the day, that there are a few charts we can turn towards that can really start to signal when it's time to really get risk on and start building those positions. That's it for me today, guys. Thank you all so much for giving me some time to ramble on and talk to you guys. If you enjoyed this video, consider dropping a like. It's one of the greatest ways you can support the channel. And I'll see you all in the next video on Friday. Take care, everyone.